Corporate Finance OneNote Practice Problem. In this presentation, we're going to work a practice problem in OneNote related to the calculation of retained earnings and earnings per share. Get ready to take a stance with Corporate Finance. Here we are in OneNote. If you would like to follow along in OneNote, you're not required to do so, but if you have access to it and would like to, we are in the 227 Retained Earnings and Earnings per Share section under the Practice Problems tab. Closing this back out. We're going to have our information up top. We're going to put that information into our calculations, which will include the calculation for retained earnings and the earnings available to the common stockholders. Now, it's going to be a little bit tricky. We're going to kind of back into the calculation for retained earnings, or in other words, we're going to be looking for net income. This is a common type of problem that will happen in many kind of book type problems. It'll be a little bit different than what you will typically do in practice, but tests the way you see the relationships of this data quite well, and therefore it's really good to practice these types of problems. So we have the earnings per share and retained earnings. The data that has been given is the ending retained earnings of the $690,000, the common dividends, the beginning retained earnings, and the shares outstanding. So when you see this data, you're thinking, okay, that looks like kind of like they gave me the data for the statement of retained earnings to calculate the retained earnings typically from beginning to the end of the year, except I don't see a key component, which is typically net income, in that calculation, and that's what they want us to find, the calculation of net income. Now remember that net income will typically be coming from the income statement, bottom line of the income statement. We'll typically create the retained earnings using the income statement, but in this case, we're going to kind of back into what would be on the income statement, that net income number. So we're going to calculate the retained earnings. Now, when you think about the retained earnings calculation, remember that this is kind of one of the more confusing type of accounts because it's wrapping up in some ways what is happening on the income statement. It's tying the balance sheet to the income statement in the format of the double entry accounting system. So remember, the double entry accounting system is assets equal liabilities plus equity. And now the income statement has revenue and expenses. So you might say, well, how do revenue expenses fit into the accounting equation? How are they part of the double entry accounting system when I don't see assets, liabilities, or equity anywhere on the income statement? That's because the income statement is basically part of equity section. The part of equity, it's part of retained earnings. So what is being shown in the equity section on the balance sheet, which is represented in retained earnings, represents a component or the story, part of what happened in the past to get to that point in time, which includes the income statement. The income statement is the story of how we got to that point in time on the balance sheet, which is basically summarized in the account of retained earnings. So then if we have then the income statement showing the net income, the activity, the increase in retained earnings, typically if there was income, revenue minus expenses, if it was income, that would be the increase in retained earnings from last year to this year. The other thing that happens in retained earnings could be that we took some of that income usually, or any retained earnings, but usually the income from the current time period, and we paid it out to the owners. We gave it back to them as a return on their investment in the form of dividends. So the two things that typically will affect the retained earnings then are net income, which usually is an increase from last year's retained earnings to this year's retained earnings if there's income that we would get from the income statement, and then a decrease for the amount of distribution we made from the company to the owners of the company, the shareholders, in the form of dividends. That's what we would expect the retained earnings to be. It's linking the income statement to the balance sheet by taking last year's retained earnings plus the change. So that would be then beginning retained earnings is where we would typically start. They gave us that number. That was given to us. Now, the beginning retained earnings in practice would be gotten from last year's balance sheet. Last year's balance sheet shows the ending retained earnings from last year, which would be the beginning retained earnings from this year. Then we would expect it to go up by the net income. Now, this is the unknown. I've got the number in here now, but I got it yellow here to show you this is the unknown. We'll also do this in Excel, by the way, and I highly recommend working these problems in Excel. But this was what they didn't give us. And then but in practice, we would typically get that from the income statement, bottom line of the income statement. And then we would have the common dividends. They did give us the dividends. Dividends represent the money that came out from the company to the owners. So those would oftentimes be taken out of retained earnings directly. So they would be removed from the retained earnings account, whereas the income would be something that rolls into retained earnings during what we call the closing process from the income statement to the balance sheet of retained earnings. And that would typically give us the ending balance in the retained earnings. Now note that they asked for net income here, and they gave us this information. Now you could start to do this in a couple different ways. What I would not recommend doing, I wouldn't recommend trying to memorize the formula to calculate the net income. Don't try to think that you need to memorize a new formula. What you should do then is think about the statement of retained earnings, which would be in this format. And I would even lay it out vertically instead of algebraically, because you could then do it algebraically, as we'll see in a second here. But I would list it vertically because that's the way most people are used to seeing it if they start to learn this stuff in the format of financial statements. Then plug in the numbers. So we're going to plug in, we know the beginning inventory. I don't know this one. I'm going to make that X or yellow. And then the common dividends, they gave us that. They gave us the ending retained earnings, which is usually what we calculate. That's usually what we're going to find. Then I know that this one is going to be the unknown. Now that I have written it out vertically, then I'll write it out algebraically so that I can then do the algebra. But I visualize it in my mind vertically, right? Because I'm used to seeing the statements, which are put in terms of a vertical format. Once I know this, then I can write it out as a linear format, so I can more easily apply algebra. So now I'm going to say, okay, the 593,000 plus something X, the unknown, the yellow item, minus the 34,000 is going to equal the 690,000. Now I have it in an algebraic format, and then can solve for X using algebra, which I won't do here, but you can solve for X, plug it back into your actual form for retained earnings, and see if indeed this number plus this number minus the dividends would get to this 690. And remember that you're subtracting out the dividends here. So the normal format, beginning retained earnings from prior period plus the net income if there was income in the period, which is normal. If there was a loss, then you'd have to subtract the loss, but normally income. Then you'd have the common dividends that were paid out. You're always going to be subtracting the dividends. Gets to the retained earnings at the end of the time period. The 690 then is what you would find then on the balance sheet. This would be the ending number on the balance sheet. Okay, so then like the other way you could do this, if you had this information that was given to you, and this would be the way I wouldn't recommend doing it, but it makes sense to some people to do it this way, and it might be the first thing that kind of comes into your mind. But what you don't want to do is try to memorize some other formula. If you know this formula, and they give you everything except for this unknown, write it out in the way you know it, and then figure out, then write down your algebra. But you could try to think of it, well, I need to get the bottom line number to be the net income. So another way you might calculate this, if you were just kind of mulling this over, thinking through this, you might say, well, I know that they gave me the ending retained earnings. They gave me the ending retained earnings, which would be on the balance sheet for the current time period. And they gave me the beginning retained earnings, which would be the retained earnings on the balance sheet for last period. The difference between those two items represents the change in the retained earnings. So you might start there. You might say, okay, I know that here's the ending retained earnings, here's the beginning retained earnings. The difference is going to be the change in retained earnings. And then you might say, well, what constitutes that change? Typically, it will be the net income that would be on the income statement and any dividends that were paid out. Here we only have common dividends. We're not worrying about the preferred dividends. So we don't have any preferred stock in this problem. So then we're going to say, okay, then if I account for the common dividends, notice the common dividends would have decreased this change. It would have resulted in a decrease. So we're going to add the common dividends back in to get to the net income of the 131. So notice what we kind of did here is we basically recalculated the algebraic problem to end with net income here. And we did it, but you might do it intuitively thinking through it like this, and that would kind of make sense. What you don't want to do is try to say, what if they give me this data and they ask for net income and I need to memorize this formula, like an algebraic formula? you don't really want to do that. But if it intuitively makes sense and you say, okay, well, the difference between retained earnings ending and beginning is this, and that means that's the change in the retained earnings, which is going to constitute typically two things, dividends, and dividends would be decreasing, and then the net income would be increasing. So this must have been decreased by the dividends. So I'm going to increase it then by the dividends, and that would then be the net income. And then you'd want to plug it into the normal calculation probably, which would be this one up top, and say, okay, beginning inventory plus the net income minus the dividends should give me that 690. And you do that to make sure that you went the right way for this, to get this 331, because you might have subtracted these two on accident, and then when you plug it back in, it won't work. so then you go, oh, I went the wrong way, and then you add it, and then you'll get it.